Hey folks, Dan Frio here, the rate update. Today we're going to talk about those coming out of forbearance because they're coming out in droves. And there's a lot of bad news in the markets right now. This was the headlines today. Wells Fargo sees borrowers' defaults starting to rise from low levels reached during the pandemic. So if you're in a forbearance, I highly suggest you watch this video. And if you know somebody, coworker, friend, neighbor, family, relative, please send this video to them so they can get out of that dreaded forbearance and get their options on what they can do and all the options that they have available to them. So don't go away. That's what we're going to talk about next. Okay, so I won't explain what forbearance is because if you're in it, you know exactly what happened. You had up to 18 months to forbear, meaning not pay a mortgage payment, but there's a lot of caveats behind the scene. What is your lender or your servicer? So let me explain something in a lot of the headlines that reads out there. A lot of times when I'm reading these captions or I'm listening to my salespeople talk, I hear them say a lot of words that you probably don't understand. And that's the whole point of this channel, is to educate you and to put it in the simplest terms as I can. So your servicer, who's the servicer? Well, basically you just look at your mortgage statement and whoever you're sending your payments into, that's the servicer. It's not always the same person you got the mortgage from. Because like, for example, we do mortgages. I'm now a broker, so my mortgages go off to another lender. You might be with that lender, but it actually gets serviced, meaning payments get sent to a different entity. So that's the differences between your servicer. Here's what I'd highly suggest you do. So let's get on to some of the headlines that I was able to find for you guys to just do some education behind this. So COVID mortgage bailouts is expiring. Here's what to do if you still can't pay. Okay, so if you can't pay, that's a tough one because you got to live somewhere. You got to make some payments. Okay, unless you're living in your parents' basement. So if you can't afford your mortgage payment, what's your alternative? Moving into an apartment. You have to really offset those differences in what those payments would be. Okay, but let's go down through the options that they're considering. They're basically saying you had 18 months to do this and so forth. But you should definitely talk it over with your servicer. So that's why I said, who's your servicer? So that's one of the first things you might want to do. The next thing is they propose here is loan modifications. Well, the hair on the back of my neck stands up when I hear loan modifications. Why? Well, I went through it one other time back in the early 2000s. And if you look up modifications, you not only see one, but about 1 billion posts of how modifications helped only the banks and really not the consumers. In the long run, a lot of people didn't realize what they were signing. What I found out in many cases was that the client went in, or the homeowner went in and took a modification with a mortgage company. Didn't really read anything. They're just like, you know what? They told me my payment's going to be the same. They're going to lump in everything on my mortgage and whatever, and I'll have a fresh start. Well, maybe not necessarily in that arrangement. What I happen to see a lot of times, most of the times, is this. It took you about 8, 12, 24 months to get a forbearance through. Some people during that time went into foreclosure anyways. They're like, well, the banks didn't, as the bank, we didn't get your paperwork. We didn't get it on time. We didn't do this. So a lot of that was farce. But I think the government was bailing out a lot of those banks and giving them monies if they tried to modify. The next thing is, this was the most common theme that I saw. They would restructure your loan, add it all together, modify you to a 40-year term, a higher rate, but give you the same payment that you were paying. Most homeowners was like, you know what, whatever. Well, please don't do that this time because you have a lot more options at this time. So let's get back to what they say next. The next thing they tell you is sell your home. Well, I'm going to be the devil's advocate on that one too. If you can't pay your mortgage, maybe your mortgage payment is way too high, that's one thing. But if you can't make your mortgage payment, are you going to be able to make a rental payment? Because unless you can live with family, you got to have a place to stay. So what I wanted to try to do is give you guys all the options and all the information about what can be done if you're in a modification, or I take that back, in a forbearance right now. So let's get into that play so I can go over those in detail. Okay, so let's go over the forbearance guidelines just so you guys are aware of what's going on. If you're looking to refinance and just refinance your balance, if you're looking to refinance to pay off some other bills that you might incur during the COVID and other things, or it's the holiday season, or you're just looking to sell that property and buy another property. So all the guidelines are different based on the loan type. So over here, you're going to see we start out with the conventional financing. So you must finish the forbearance and make 3 consecutive monthly payments to do a rate and term, meaning just to refinance your current balance or to pull out cash. Okay, so that's the easiest way I can explain that one. So let's get on to the next section of this, and I'm going to scroll. I tried multiple ways to do this, but this was the easiest way for me to navigate through, plus for you guys to be able to see all the guidelines. Now, this is a copy and paste from the guidelines in conventional financing. So Fannie Mae and Freddie Mac, these are their guidelines. So let's go through those just briefly. I don't want to confuse you. I just want to get to the point. So if you hear, oh, that's my loan type, oh, that's what I'm looking to try to do, you can get it and say, okay, I know now what I need to do. So the first thing is you reinstate it. If you resolved all your missed payments or deferred payments or forbeared payments, you bring everything current and you're good to go. But loss mitigation, that means you're in litigation with the lender. That's not a good thing. So we're not going to even go in that realm. You don't want to be in loss mitigation, okay? So that's 2 areas right there. FHA, I don't know why I can't get this T out of there, but I just can't right through here. Effective on all case numbers from October 30th, 2020 and after. Basically, in a nutshell, what this is saying, though in forbearance, the borrower continues to make all the payments on the existing mortgage and the forbearance plan is terminated. If a cash out, the borrower successfully completed the forbearance plan and made 12 consecutive monthly payments past the forbearance period. So let me explain that in a nutshell. You're in a forbearance. You have an FHA loan, right, which is right there. If you want to cash out, meaning pull out money to pay off other bills, you have to get out of the forbearance and make 12 consecutive payments. A lot of people are going to say, well, I can't do that with all the bills I have right now. So there might be other options for you. Okay, so I'll get over that in a second. For purchases and no cash out refinances, the borrower must successfully complete the forbearance plan and make at least 3 mortgage payments. Okay, so if you're looking to purchase a home and you were in a forbearance, different programs call for different things. Some programs you can automatically buy if you sold the house that was in forbearance. Others you can't. Okay, so that's that part of the equation. There is a program called an FHA, what's called a streamline. Now you can do a streamline payment as long as you are current at the time that you went into forbearance and you're completed with the forbearance agreement. So you're out of forbearance. What you can do is you can refinance the loan and you can include all of the back payments that you deferred or forbeared into the loan and take out a new loan. That is what I would highly suggest before you really dive into the modification piece, because that is a complete nightmare. And ask your family, friends, neighbors, relatives, coworkers, and everybody. If anybody went through it, it was miserable. Okay. So again, I'm flying through these just because I don't want to bog you down on all this other stuff. But in here, you can see I captioned the easiest way to do this is an FHA streamline. You don't need an appraisal. We don't need to verify your income. And it's a way to get over the debt ratio guidelines. Okay, meaning if you have a lot of credit cards right now that you're just kind of buried in debt, what we might be able to do is consolidate your mortgage in all the forbeared payments and the current mortgage, refinance that under a streamlined program. You would be able to skip at that time 2 more mortgage payments. Maybe those would be enough to get you back on your feet, to give you kind of a little bit of a fresh start. Then make 6, 8 payments, 12 payments on time, and then we'll look at options to refinance you out of that and maybe pay off some bills and so forth, depending on your credit scores and how much equity you have in your home. All right. So we get back through here, and that basically goes through all this. There's a whole bunch of different variations in guidelines. So this is a thread of all the guidelines, but I'm not trying to bore you to death. If you have a VA loan, The easiest way to do this is the same thing. It is similar to an FHA streamline. There's no appraisal needed. Okay, we still need to get your income documentation, but you can take the arrearages that you have on your forbeared payments plus your current VA balance, wrap that up into one easy, well, not one easy, one transaction. So you have one mortgage payment. It starts you out fresh. You probably are going to skip at least one, maybe two more mortgage payments to help you out a little bit more to get you back on your feet. All right. So if you're looking to purchase or cash out, refinance with a VA loan, the guidelines are very similar or almost identical to FHA. You have to finish the forbearance period and make 12 consecutive payments. But again, the easiest way to do this is by doing a loan that's called the VA IRRRL. Okay, I won't say what that stands for because I keep forgetting it. I write it down and I'm like, it's irrelevant. It's just it's a basic, easy refinance for those in a VA loan. So that's the VA guidelines. There's a whole bunch of mumbo jumbo here I won't bore you with, and that's it. So then we get to last but not least, USDA. Easiest way to do that also is a streamline. So basically, let's break these all into a nutshell. If you're in a forbearance, it's time now to take your head out of the sand and let's figure out what you're going to do. Should you call your servicer? Should you modify? Should you refi? Should you sell? I don't know. Only you can answer that. But what I'd highly suggest you do is give us a call. We can at least explore all your options, run the numbers, do whatever you want. We'll answer any and all questions for you. We'll run new numbers. We'll put you on different programs. What works? We can manipulate this thing any which way you want to see what ends up being your best option, which your best option might not be the person's next to you. So we need to customize it to you and you only. So how do you find out more about all this stuff? How can you reach us so we can guide you? We're now a mortgage broker. I'm with the largest mortgage brokerage in the entire country. We have over 180 lenders that we deal with. Let me be your mortgage advisor throughout the whole country. So how do you find out more about me and my team? Just go to therateupdate.com, and up at the top, you're going to see multiple options on what you can do. You can either book a meeting with us. That's what I highly suggest if you're in a forbearance, because there's going to be a lot of questions that you're going to want answered. There's going to be a lot of questions that we have for you. The next thing is give us a call. It's easy as 844-775-5626. Or if you're like, Dan, I just want to apply, I'm good. My mortgages are current. I didn't have any issues, but I need your assistance to get me the best rate, the best program, and the best fee structure in the whole industry. Just click the apply now button and you're on your way. So that is it for today, guys. I will be back tomorrow, same time, same place, first thing in the morning, letting you guys know what's going on with mortgage rates and what the real estate industry looks like today. So thanks for watching. Please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you tomorrow, guys. Bye-bye.